Countdown to crisis. Experts predict China's financial stability could waver within 18 months. Date: January 30, 2025. Overview. Recent analyses from various experts suggest that China's financial stability may face significant challenges in the coming 18 months. The combination of economic pressures, a struggling real estate market, and geopolitical tensions with the United States has sparked concerns over the potential for a financial crisis. The Carnegie Endowment for International Peace and other sources provide insights into the evolving landscape of U.S. China relations and the intricate dynamics that could influence China's economic future. Key economic indicators. 1. GDP growth projections. The World Bank forecasts a decline in China's GDP growth from 5.2% in 2023 to 4.5% in 2024. The sluggish growth is attributed to persistent issues in consumer spending and a faltering real estate sector, with property investments plummeting by 9.4% annually. This downturn poses risks not only to the real estate market but also to the broader economy, potentially leading to social instability. 2. Employment and wages. Job growth in China remains concentrated in low-skilled sectors, which correlates with minimal wage growth. This situation exacerbates domestic instability as citizens face economic pressures without significant financial relief. 3. Consumer sentiment. Consumer confidence has been wavering primarily due to high debt levels and the ongoing impact of the COVID-19 pandemic. The lack of robust recovery in consumer spending is a critical factor that could impede economic growth and stability. Geopolitical tensions with the United States. The U.S. China relationship is at a pivotal juncture characterized by increasing military and economic competition. Experts warn that miscalculations in this complex dynamic could lead to military confrontations, particularly concerning contentious issues such as Taiwan and territorial disputes in the South China Sea. 1. Military posturing. The United States aims to maintain strategic military superiority in the Asia-Pacific region. Analysts argue that a stable military balance is crucial to prevent crises. The U.S. has adopted a denial strategy to deter potential aggression from China while reinforcing alliances with regional partners such as Japan and Australia. 2. Economic frictions. While both nations are interdependent economically, the prevailing sentiment is shifting toward strategic competition. Calls for a managed coexistence are growing, but immediate economic vulnerabilities and geopolitical anxieties complicate this goal. Potential scenarios for U.S. China relations. 1. Cooperative conflict. The Carnegie Report highlights the possibility of a more constructive relationship, emphasizing the need for frameworks that promote competitive coexistence rather than outright confrontation. This approach would require both nations to recognize their interdependencies and prioritize dialogue to mitigate risks. 2. Escalation of tensions. Conversely, if both countries fail to manage their military and economic postures effectively, the likelihood of a financial crisis in China could escalate significantly. An increasingly aggressive stance from either side may provoke retaliatory measures, leading to a cycle of conflict that adversely affects economic stability. Timeline of events. 2023, China experienced a brief recovery with a GDP growth rate of 5.2% in Q3, but ongoing challenges in property investment and consumer spending cast doubt on sustainability. November 2023, U.S. and Chinese leaders met at the APEC summit, signaling an attempt to stabilize relations amid growing tensions. 2024, the World Bank predicts further economic slowdown, with growth expected to decline to 4.5% due to persistent struggles in the real estate sector and external economic pressures. Conclusion. The potential for a financial crisis in China within the next 18 months is increasingly plausible, largely influenced by domestic economic vulnerabilities and the complex geopolitical landscape. While there is room for cooperation and dialogue, the growing tension between the United States and China necessitates careful management to avoid destabilizing outcomes. Experts warn that without significant reforms and a commitment to constructive engagement, the risks of economic instability and social unrest could rise sharply in the near future. This report synthesizes the insights from the Carnegie Endowment for International Peace and recent economic forecasts, outlining the key factors that may contribute to a potential crisis in China's financial stability within the next year and a half. The analysis of China's financial stability and U.S. China relations reveals several counterintuitive insights that challenge common perceptions about the trajectory of these dynamics. Here are the key points. 1. China's economic growth versus global expectations. While many expect China's economy to continue growing rapidly, recent forecasts suggest a decline in growth rates. The World Bank projects a drop from 5.2% in 2023 to 4.5% in 2024, primarily due to issues in the real estate sector and sluggish consumer spending. This expectation may counter the narrative that China is on an uninterrupted path to becoming the world's largest economy. 2. The impact of geopolitical tensions on domestic stability. The ongoing geopolitical tensions with the United States, especially surrounding Taiwan, are not only affecting international relations but also exacerbating domestic economic vulnerabilities in China. As tensions rise, the potential for military confrontation could lead to economic repercussions, further straining China's financial stability. 3. Military dynamics versus economic realities. There is an assumption that military strength will directly correlate with economic success. However, the Carnegie report emphasizes that a balanced military presence can help avoid conflict, suggesting that an arms race could actually destabilize both nations economically and politically. This highlights a paradox where reducing military aggression could enhance economic stability. For misconceptions about currency rivalry, the narrative that the renminbi will replace the dollar as the global reserve currency is challenged by the reality that China's leadership does not seek to displace the dollar but rather aims for a more significant role for the renminbi within a multipolar monetary system. This indicates a more cooperative approach rather than a zero-sum contest. 5. The role of domestic politics in U.S. China relations. The increasing polarization in U.S. politics could lead to a more aggressive stance toward China, contrary to the potentially stabilizing effects of diplomatic engagement. The bipartisan consensus on viewing China as a competitor complicates efforts to pursue a more nuanced and cooperative relationship based on mutual interests. 6. A global interdependence versus national security. The interdependence between the U.S. and China in economic terms runs counter to perceptions that greater competition will automatically lead to conflict. The analyses suggest that both nations have strong incentives to collaborate on global challenges such as climate change and pandemics, even amidst rising tensions. 7. Expectations of military conflict. The prevailing belief that a military conflict between the U.S. and China is imminent overlooks the complexity of both nations' strategic calculations. Although the risk of conflict is real, particularly over Taiwan, both sides may prioritize avoiding a catastrophic war, indicating a possible preference for managed competition rather than outright confrontation. 8. Potential for positive change. The expectation that U.S.-China relations are on an inevitable downward trajectory fails to consider the potential for positive change through strategic dialogue and cooperation. The idea that both nations could work together on shared global challenges demonstrates that engagement is still possible despite current tensions. These counterintuitive insights suggest that the future of China's financial stability and U.S.-China relations may not follow the linear paths that many analysts predict. Instead, the interplay of economic realities, military dynamics, and geopolitical strategies could lead to unexpected outcomes, emphasizing the importance of a nuanced understanding of these complex relationships. The report, titled Countdown to Crisis, Experts Predict China's Financial Stability Could Waver Within 18 Months, covers critical insights into the potential fragility of China's economy and its implications for global stability. While many readers might focus on the overarching themes such as economic forecasts and geopolitical tensions, several important aspects are often overlooked that are significant for understanding the broader context of U.S. China relations and global economic stability. Key overlooked insights and their significance. 1. Economic growth projections. The anticipated decline in China's GDP growth from 5.2% in 2023 to 4.5% in 2024 is alarming, but the implications of this shift are even more critical. This deceleration is not merely a statistic, it reflects deeper structural issues within China's economy, particularly in the real estate sector, which has seen significant investments collapse. Significance: the real estate crisis poses not just a risk to economic growth but also to social stability. A decline in economic performance could lead to rising unemployment, especially among youth, and increased public discontent. This unrest can manifest in protests or other forms of civil disobedience, challenging the legitimacy of the Communist Party and increasing the risk of internal conflict. 2. Military dynamics and strategic posturing. The report details the military dynamics between the U.S. and China, emphasizing a stable military balance as critical to avoiding crises. However, the nuanced discussion surrounding military strategies, specifically the denial strategy employed by the U.S., is often glossed over. Significance: a denial strategy aims to prevent China from achieving its objectives through military means. This approach reflects a shift towards a more defensive posture rather than an offensive one, which could inadvertently lead to miscalculations by both sides. Understanding this dynamic is crucial as it sets the stage for future interactions and potential flashpoints, particularly regarding Taiwan. 3. Interdependence and economic vulnerability. The analyses highlight interdependence between the U.S. and China, particularly in trade and technology. Despite rising tensions, both economies remain intertwined. However, the growing sentiment of decoupling, especially in technology, is often emphasized without fully considering the repercussions of such a shift. Significance: economic decoupling could lead to a fragmented global economy where both countries operate in isolated spheres, increasing costs for consumers and businesses alike. Moreover, a lack of cooperation on global challenges like climate change and pandemics could exacerbate these issues, leading to a more unstable global environment. 4. China's military expansion and nuclear threat. While the report outlines the growth of China's nuclear arsenal, the broader implications of this military expansion are frequently underestimated. Significance: the growth of China's nuclear capabilities could lead to an arms race that increases global instability. Moreover, it raises the stakes for U.S. policymakers who might feel pressured to respond aggressively to perceived threats, further escalating tensions. 5. Global financial stability. The report mentions the potential for a financial crisis in China but does not delve into how this could ripple through the global economy. China's economic health is integral to global supply chains, and its slowdown could impact economies worldwide. Significance: a financial crisis in China could lead to reduced demand for exports from other countries, particularly emerging markets, potentially leading to global recessionary pressures. This interconnectedness means that policymakers must consider not just bilateral relations, but also how their actions can have far-reaching implications. 6. Narrative framing and political rhetoric. The framing of U.S. China relations within the contexts of cooperation versus strategic competition is pivotal. However, the rhetoric surrounding these terms often lacks a deeper exploration of how these narratives shape public perception and policy decisions. Significance: the language used by leaders and media can escalate tensions or foster cooperation. Understanding the impact of narrative framing can help policymakers create a more conducive environment for dialogue rather than confrontation, paving the way for potential diplomatic resolutions to conflicts. 7. Domestic political influences. The report briefly touches on the impact of domestic politics in both countries, particularly the bipartisan consensus in the U.S. to adopt a tougher stance towards China. However, the implications of this political environment are underexplored. Significance: domestic political pressures can lead to foreign policy decisions that prioritize short-term gains over long-term stability. The potential for a return to more aggressive policies, especially if fueled by populist sentiments, could derail any diplomatic efforts aimed at de-escalating tensions. Conclusion: the overlooked aspects of the report underscore the complexity of the U.S. China relationship and the potential ramifications of economic and military dynamics. As the situation evolves, it is crucial for policymakers to not only focus on immediate threats but also consider the broader implications of their actions within a global context. By understanding these nuances, there is a better chance of navigating toward a more stable and cooperative future, rather than one defined by crisis and conflict. For most valuable points for in-depth analysis and discussion. 1. Economic vulnerability and forecasts. The prediction of a significant decline in China's GDP growth, from 5.2% in 2023 to 4.5% in 2024, highlights the precarious state of the Chinese economy, particularly in relation to the faltering real estate sector and weak consumer spending. The World Bank's assessment indicates that this economic downturn could incite domestic instability resulting from rising unemployment and stagnant wages in low-skilled sectors. This point prompts critical discussion on the potential ramifications of economic instability in China, which could lead to increased social unrest and challenge the legitimacy of the Chinese Communist Party. Analysts must consider how these economic pressures might influence China's domestic politics, social cohesion, and by extension its foreign policy, particularly regarding its relationship with the U.S. and geopolitical maneuvers in Asia. 2. Geopolitical tensions and military dynamics. The increasing militarization of the U.S. China relationship, particularly in relation to Taiwan, creates a critical flashpoint that could escalate into direct conflict. With both nations framing their military and economic strategies in competitive terms, the potential for miscalculation or escalation remains high. The strategic posture of the U.S., which aims to deter Chinese aggression while maintaining alliances in the region, underscores the importance of a stable military balance to prevent crises. An in-depth exploration of the implications of these military dynamics is essential, examining how both countries can manage their military postures to avoid a destabilizing arms race. This discussion should also include the potential consequences of any military confrontation, especially regarding nuclear deterrence and the broader implications for global security. 3. Interdependence versus competition. The complex interdependence between the U.S. and China, especially in terms of trade and technology, raises important questions about the future of their relationship. Experts suggest that while strategic competition is becoming the dominant narrative, there is still room for cooperation on global issues such as climate change and pandemic preparedness. This duality necessitates a deeper analysis of how both countries can navigate their competitive ambitions while still engaging in mutually beneficial collaborations. Discussions should focus on the economic and political frameworks that could facilitate this coexistence, examining historical models of competitive coexistence and whether they can be effectively applied to the current U.S.-China landscape. 4. Global economic leadership and currency dynamics. The discussion surrounding the future role of the renminbi in the global monetary system presents a crucial area of analysis. As China seeks to internationalize its currency, the implications for the dollar's dominance and the potential for a more multipolar monetary system need to be explored. The U.S. must consider how its policies could either facilitate or hinder the renminbi's rise, as well as the economic consequences of a bifurcated monetary system. This topic opens avenues for discussing the strategic economic policies that the U.S. could adopt to maintain its economic standing while also accommodating China's aspirations for a more significant role in global finance. Furthermore, the potential impacts of currency dynamics on global economic stability, trade relations, and geopolitical alignments warrant thorough exploration, especially in light of recent geopolitical tensions and economic sanctions. These points provide a comprehensive basis for in-depth analysis and discussion, allowing for a nuanced understanding of the evolving landscape of U.S. China relations in the context of economic stability, military dynamics, interdependence, and global economic leadership. Here are three famous historical cases that bear similarities to the current concerns regarding China's financial stability and geopolitical tensions. 1. The 1997 Asian financial crisis. This crisis started in Thailand with the collapse of the Thai baht after the government was forced to float it due to insufficient foreign reserves. This event triggered a chain reaction across Asia, leading to severe currency devaluations, stock market crashes, and economic recessions in several countries including Indonesia, South Korea, and Malaysia. The crisis was exacerbated by massive capital outflows and a lack of financial transparency. Similar to how China's current issues in the real estate sector and banking system could lead to financial instability. Just as experts warned of contagion effects during the Asian financial crisis, there are fears that China's economic troubles could have widespread repercussions on global markets. 2. The Great Depression 1929. The stock market crash of 1929 in the United States marked the beginning of the Great Depression, which had devastating effects on economies around the world throughout the 1930s. Similar to the current predictions regarding China's economic slowdown and its impact on global trade, the Great Depression led to a significant decline in international trade, widespread unemployment, and political instability. The interconnectedness of global economies during the Great Depression mirrors today's global economic landscape, where a downturn in one major economy, such as China's, could lead to a ripple effect across multiple nations. 3. The Eurozone crisis 2009 to 2012. This crisis was primarily triggered by the sovereign debt levels of several Eurozone countries, including Greece, Ireland, Portugal, Spain, and Italy. As fears about a potential default spread, they led to rising borrowing costs, bailouts, and austerity measures, ultimately threatening the stability of the Eurozone. The crisis highlighted vulnerabilities in economic and financial systems akin to the vulnerabilities currently seen in China's real estate and banking sectors. The management of the crisis required extensive international cooperation and engagement, reflecting the geopolitical tensions and economic interdependence seen in the U.S. China relationship today. These historical cases illustrate how economic instability in one region can lead to broader consequences. Similar to the concerns regarding China's financial stability and its implications for global markets and geopolitical relations. Future outlook. Predictions for U.S.-China relations and China's financial stability. As we look forward to the next few years, the trajectory of U.S.-China relations and China's financial stability is set to be shaped by several critical dynamics. Based on current analyses and projections, we can outline the following predictions. 1. Continued economic challenges in China. China's economy is expected to face significant challenges, with growth forecasted to decline from 5.2% in 2023 to around 4.5% in 2024, according to the World Bank. This slowdown is primarily driven by a struggling real estate sector and subdued consumer spending. The persistent issues in the property market, characterized by high debt levels and defaults among developers, are likely to exacerbate these challenges. The trend of low consumer confidence may persist, further limiting economic recovery efforts. 2. Potential for domestic instability. The economic downturn, coupled with a lack of sufficient job growth in higher-skilled sectors, may lead to rising domestic discontent. As China's population ages and the burden on younger generations increases, the risk of societal unrest could grow. Analysts warn that without substantial reforms to stimulate consumer demand and address real estate vulnerabilities, the potential for domestic instability within the next 18 months remains a pressing concern. 3. Shifting U.S.-China relations, from competition to confrontation. The relationship between the U.S. and China is likely to evolve from strategic competition toward increased confrontation, particularly over critical issues such as Taiwan. The likelihood of military incidents in the Taiwan Strait remains high as both nations continue to bolster their military capabilities. Should a significant conflict arise, It could have dire implications for both countries and the global economy. 4. Military dynamics and arms control efforts. While the military balance in East Asia is expected to remain tense, there is potential for a more stable military equilibrium if both sides manage their postures with caution. The U.S. will likely continue to enhance its military presence in the region, supported by alliances with Japan, Australia, and others. However, the establishment of effective crisis management and communication channels will be crucial to preventing escalation into open conflict. 5. Economic decoupling and global implications. The trend of economic decoupling between the U.S. and China is expected to continue, affecting global supply chains and trade dynamics. The U.S. will likely maintain a strategy of limiting technology transfer and investment in Chinese firms deemed security risks. This decoupling could lead to increased fragmentation in the global economic system and a shift toward regional trade blocs, impacting both economic growth and geopolitical stability. 6. The role of the renminbi in the global economy. China's efforts to internationalize the renminbi will be gradual and cautious. While there is potential for increased use of the renminbi in global trade, particularly in the global south, it is unlikely to challenge the dollar's supremacy in the near term. The Chinese government is likely to focus on stabilizing its economy and avoiding overexposure to global financial volatility before fully committing to the renminbi's internationalization. 7. Possibilities for managed coexistence. Despite the prevailing tensions, there are scenarios where managed coexistence becomes feasible. If both the U.S. and China can set aside some of their more adversarial positions and focus on cooperative frameworks, especially in areas like climate change, health security, and economic stability, there may be a path toward a more constructive relationship. The potential for joint initiatives could help stabilize the broader geopolitical landscape. 8. The impact of domestic politics in both countries. Domestic political dynamics in both the U.S. and China will significantly influence bilateral relations. In the U.S., a potential shift in leadership could alter the approach to China, impacting the prospects for cooperation or confrontation. In China, the leadership's response to economic pressures and international criticisms will shape its foreign policy and engagement strategies. 9. Geopolitical realignments. As the U.S.-China rivalry intensifies, countries in the Asia-Pacific region, such as India, Japan, and South Korea, will play pivotal roles in shaping the future balance of power. Their responses to U.S. policies and China's assertiveness will be crucial in determining regional stability and the effectiveness of alliances. 10. Conclusion: a critical period ahead. In conclusion, the next 18 months are likely to be pivotal for both China's financial stability and U.S.-China relations. The intersection of economic stress, geopolitical tensions, and domestic political pressures suggests a complex and potentially volatile landscape. While the potential for cooperation exists, particularly around shared global challenges, the path forward will require careful navigation to avoid miscalculations that could lead to conflict. Both nations' leaders will need to prioritize dialogue and strategic restraint to mitigate risks and foster a more stable international environment.